Okay, got it. Okay, good. Yeah. So we need to prepare our employees in advance for not only facilitating a smoother transition once the implementation rules are in place, but also to ensure that the organization is at the forefront of compliance and data protection practices. So as part of the various knowledge series that FIWE has embarked upon, this is knowledge series 8, which talks of financial literacy webinar. So literacy, my friends, is a very nascent term. It is to do with the triple R's, to read, write, recite, just the ABCs. It is not education. Education is more in depth. So today, Divya Madam is going to touch upon financial literacy, and I'm sure later in time, she will come back to us to educate us on the topic further. So having said this, I will not take much of your time. I will hand over the platform to Madam CA Divya Jain to take it forward from here. And we would love to engage in this excellent 2 hours session from where we expect to take a lot of takeaways, which will help us in our work. So over to you, Divya ma'am.
Thank you so much, Rupaji, for the introduction. And thank you for the Federation also to give me the opportunity to speak about the topic like GST, income tax, and the financial literacy all together. So as you introduce me, I am currently working in data protection regulation, but apart from that, I am a chartered accountant and I'm working in this field from last 8 years. I am delivering session not on data protection, but on the other topics like income tax, GST with various organizations, and continuously delivering sessions. So this is the first time I am delivering a session on this platform with your federation, and I really thank to you and all the federation member to giving me this opportunity. And I welcome all the participants who have joined this session, and I hope you will be able to take good value from this 2 hours session. I have divided the session into two parts. First of all, I will be talking about the GST part. And once we'll complete the GST prospectus, so it is an overview how we have to comply with the GST. So once we'll complete the GST part, we can have a 10 minutes session or query Q&A session, wherever any participant have any query, we can discuss about it. And then we'll take the other session, other topics, like one is the income tax and another one is about the financial statements, a brief about the financial statements. So for the GST specifically, I'm just sharing my screen. I have a PPT to share, just a second. Let me know once my screen is visible.
Yeah, it's visible.
It's visible. Okay.
Yeah.
Cool. So in the GST, we will be discussing about the overview, the applicability, the type of registration, what is supply as per the GST Act, and then the classification of taxes under GST, then LUT, this is a letter of undertaking, then reverse charge and refund. So this is a complete overview that how we have to take care of our GST regulation, or how we can be stay compliant with the GST whenever we are running any business or we are just starting a business. So how we have to be compliant with GST. So let me start with the GST overview, like when the GST came into the picture. So as we are just discussing not about the GST only, but about the income tax also. So first of all, I just want to give you a brief like how there are different kind of taxes altogether. So there in India, there are two types of taxes. One is the direct taxes, another one is the indirect taxes. Direct taxes are something like when you have to pay the tax by yourself. Just like in income tax, you are earning some profit and you are paying taxes out of your own income, like out of the net profits. That is a direct tax. Like directly, it will be implied directly you have to pay the taxes from your own pocket. Then we have GST type taxes, which are indirect taxes. So GST is not only the tax which is indirect, but indirect taxes are taxes where you have to collect the taxes from the ultimate consumer and pay to the government. So in which the entrepreneurs who are collecting and paying are the mediator basically, and mediators have to obtain the GST and compliant with the GST Act. So as we have two type of taxes, direct and indirect, and we'll be covering both the direct and indirect like GST and income tax here in this session. Apart from GST, there are other indirect taxes also, like custom service tax was earlier before GST, and excise, which is applicable in few products currently also. Then so there are before GST there are various indirect taxes, but now it's subsumed in the GST. So let's continue with the GST here. So whenever we are buying something or we are selling something, so we have to comply with the GST. In July 2017, 1st July 2017, the GST was enacted, and lot of indirect taxes like service tax, like VAT, like entertainment tax, or we can say that total 22 taxes were subsumed in the GST Act, and now we have goods and services tax applicable on all the transaction. Either we are buying, selling. If we are buying, we have to pay GST, and if we are selling, we have to collect and submit. So GST is all about putting the tax on the transaction, whatever transaction we are conducting in our business. So this is just a chart to represent that whenever we are buying the raw material, earlier there was a VAT. Then if we are purchasing that material for the purpose of manufacturing, then at the time of manufacturing, we have to pay the excise duty. And then we are selling it to the wholesaler, and at the time of selling it to the wholesaler, we have to collect that VAT. And whenever wholesaler is selling it finally to the retailer, we have to collect the VAT. And then final consumer, like retailer is selling to the final consumer, also there is a VAT. So this was a chain earlier when the GST was not there. Now at each stage, the VAT, excise, and everything is replaced by GST. Like if we are buying the material, we have to pay GST. If we are manufacturing, we have to, at the manufacturing part, there is no GST, but whenever we are selling it to the wholesaler, then there is a GST. And then wholesaler is selling it to the retailer, then we have GST. And then the final consumer, there is GST. So there is no other tax apart from GST in most of the cases. There are few cases where excise is still applicable, or VAT we can say is still applicable, like in case of liquor manufacturing, the VAT is still applicable. For petroleum, like few of our mineral ore, the VAT is still applicable, but in 99.99% cases, GST is totally applicable in our country. What is the applicability when the GST needs to be applied if we are running a business? So when we have to take the GST? In case of if we are dealing in goods, like sale of goods, then the GST is applicable when we will exceed the turnover of 40 lakhs. So whenever we are exceeding a turnover of 40 lakh, we have to comply with the GST. We have to obtain the GST, and we have to file or comply all the regulations as per the GST Act. Then if we are dealing in the sale of services, then in that particular case, the limit or the aggregate turnover is 20 lakh. It means if we have like provided the services for 20 lakh plus, then we have to apply for the registration. I have also categorized it on some other basis. Like there are two other categories, like normal category states and special category states. So what are normal category states? As I mentioned that GST is applicable on globe, like in all in the complete country, let's say in all the states. So there are certain category which certain states which achieve the category of special category. So in that particular scenario, we there is a special turnover limit. after which we have to obtain for the GST registration, and the special limit is 10 lakh. So which states are called and comes under the special category are, so normal category states are Kerala, Chhattisgarh, Jharkhand, Delhi, Bihar. So the special category states are Jammu, Kashmir and Ladakh. Special category states are Pondicherry, Meghalaya, Mizoram, Manipur, Sikkim, Nagaland, Arunachal Pradesh. So what is basically the agenda is, because whatever the states are special category state, they do not have much of the transactions, their population is very low. So when they are reaching up to the level of 20 lakh or 40 lakh, it is not easy for all the vendors to reach at that particular level. So they have a provision that they can reduce the turnover, aggregate turnover level for obtaining the GST registration. So in that particular situation, the state have an option either to opt for the special category or do not opt for the special category. If the special category is opted, then the registration needs to be obtained at 10 lakh in case of services, 20 lakh in case of goods, and if no if the option for the special category is not opted, then our normal provision will prevail, that in case of sale of services, you have to obtain the GST registration at 20 lakh, and in case of sale of goods, you have to obtain the GST registration at the turnover of 40 lakh. There was earlier, before 2021, there was a provision that the 40 lakh, in case of sale of goods, the turnover was not 40 lakh, it was 20 lakh. And in case of good sale of services, it was not 20 lakh, it was 10 lakh. So here I have mentioned that which states have opted for the normal category, which states after the revision, which states have opted for the status quo, like Telangana still have the same status, like they are the normal category state, then special category state who opted for 40 lakh. Like these are the special category states like Jammu and Kashmir and Ladakh, but they have opted for normal category. Like they will go, like if you have a business in Jammu and Kashmir and Ladakh in Assam, then even though they are special category states, but they have the provision of obtaining the GST registration at the 20 lakh and 40 lakh exemption. And the special category state who opted for 20 lakh, these are the states. So why we have a different category of states? Because let's say if we talk about Jammu and Kashmir, so in Jammu and Kashmir, a lot of the population is very less, and for each trader or for the service provider, the scope is very less, and to reach to 40 lakh and 20 lakh is not possible. So they have an option to reduce the turnover so that the GST registrations can be easily obtained and lot of monitoring as per the indirect taxation can be done. So this is the agenda of dividing India into like some states into the special category state. And every state have an option to obtain certain kind of cess. So in Kerala, can now charge calamity cess up to 1% on all the intrastate supply. So if they are doing any intrastate, like within the state supply, so they can obtain 1% additionally. Like if the GST rate is 5%, so they can obtain 5% plus 1% of the calamity cess on all the goods and services, supply of goods and services to cope up with the natural calamities posed by the state last year. Then we have to understand that there is a compulsory registration. We have understood that on the basis of turnover, we have to obtain the registration compulsorily. Like if we exceed the turnover above 40 lakh, in case of sale of goods, we have to obtain. This is mandatory. Then we have to obtain in case of services about uh, 20 or 10 lakh, whichever case is applicable. But in certain cases, the turnover criteria is not applicable. We have to obtain the GST registration even if we are conducting the business even for 1 rupee. Like it is mandatory when we are starting the business. Non-resident taxable person. If some non-resident is conducting any kind of services or selling, purchasing goods here in India or conducting any business here in India, so they have to obtain the registration at day one. So there is no exception in case of non-resident. Why is it so? Because non-residents are now conducting a business and they can move anytime to their own country. So if they have conducting any business and not paying GST, so we cannot force them once they leave India. So it is mandatory for them to obtain the GST registration at day one. Then person taxable under the reverse charge basis. What is reverse charge basically? So reverse charge is something like if I'm selling something to you, am I supposed to obtain the GST registration? Yes. Am I supposed to collect the GST from you? Yes. But if I'm giving certain kind of services, which is return, if I am doing those kind of services, then I am not supposed to take the GST. I am not supposed to collect the GST. And the person who is taking services from me have to pay the GST on the reverse charge basis. Let's say I'm a law firm. Let's say I'm a law firm and I'm providing the legal services. Then for the lawyers, they are not supposed to take the GST registration. So what if you are collecting or taking any services from a law firm, and if they are not charging you GST, then the person who is receiving the services is liable to obtain the GST registration and pay the GST on the reverse charge basis. Like the person who is receiving the services paying the GST, it means it is a reverse charge basis. So if and this law service, the category like the legal services, or there are a list of category on which the GST needs to be paid on the reverse charge basis. So if you are liable to pay the GST on the reverse charge basis, then there is no exception or there is no exemption as per the turnover. You have to obtain the GST registration at day one. What are the kind of services which are applicable under the reverse charge basis? So legal services, GTA services, and there is a long list where you have to pay the GST in the reverse charge basis. And import of services, like say if you are importing anything, import of services, like if you're importing any license, then in that particular case, you have to pay the GST on the reverse charge basis and obtain the GST registration at day one. Then if you are liable to deduct the TDS under GST, yes, there is a provision to collect the TDS as per the GST Act. And if you are liable to do that, then there is no turnover criteria. You have to obtain the GST registration at day one. Every e-commerce operator providing a platform, like if you are an e-commerce operator and you are providing or registering all the vendors and providing services to the customers, let's say Amazon, Flipkart, they are not selling by themselves, they are an e-commerce platform, and these kind of platforms are already also in the case of services goods. So all the e-commerce platforms, they have to obtain the GST registration, and they have to collect the TCS. So all the e-commerce vendor have to obtain the GST registration. And if you are also registered as an individual or as a company on the e-commerce platform, let's say if you are a normal trader and you want to register yourself on the e-commerce platform like on Flipkart, Amazon, then it is mandatory for you to obtain the GST registration, because e-commerce platform will deduct your TCS, and they'll be able to deduct your TCS only when you will have the GST registration, and for that TCS you will be getting the benefit. So for e-commerce platform, you have to obtain the GST registration at day one, like Amazon will obtain the GST registration, and the vendors who are actually registered on the Amazon are also required to obtain the GST registration. Person who are making a sale on behalf of someone else, whether as an agent or a principal, yes, if we are selling, like say if I am selling anything on behalf of my principal, and I'm basically representing myself as an agent of that principal, then I have to obtain the GST registration. Then one point is still left, that is the input service distributor. The input service distributor also have to obtain the GST registration at day one. Who is the input service distributor? So input service distributor is a person who have to let's say, let me give you an example. Let's say we have a business whose head office is in Delhi, and who have, let's say, 5 or 6 branches in the different state. Now, if we are collecting any input in our Delhi office, which is a head office, and we are not billing or generating the sales invoice from our head office, then in that case, all the input collected in the head office will not be utilized, because we are not selling or generating the sales invoice from that particular head office. In that case, all the input collected at the head office will be distributed to all the branches based on the for which branches we took the services. Then in that case, the Delhi office, the head office, have to obtain the registration as an input service distributor. They'll collect the input, like all the input that they have received, and they have to distribute the input to all the branches. For this, the best example is the audit services, because as a company, there will be a single auditor and they'll raise the invoice to a single, let's say, to the head office or any of the branch. Then it has to be divided into the branch wise, because we will be conducting or maintaining the books of account branch wise. Now, in that case, to distribute the input branch wise, we have to obtain the GST registration of the distributor, input service distributor for the head office, because we have to distribute the input. So in this particular scenario, so in all these particular scenario, there is a no turnover limit. We have to obtain the GST registration at day one. So there are 2 types of GST registration. What is mandatory registrations that we have just discussed in the previous slide, and then the voluntary registration. What is voluntary registration basically? Voluntary registration is something that, as I've discussed in this category, like we have to obtain the GST registration at 40 lakh and 20 lakh. Now, if we want to obtain the registration below 20 lakh, or anybody want to say something? Actually, there is some. Okay. If anybody have any question, you can raise a hand or you can just type in the chat box. Voluntary registration. If, as I mentioned, that there is a turnover criteria that we have to mandatorily obtain the GST registration once we close the turnover. And if you want to obtain the GST registration before crossing that limit, that will be considered as a voluntary registration. Let's say I'm starting a business here in India and I want to obtain the GST registration, even my turnover is not exceeded. So I can do that. Even if I'm not even falling in any of this category, I can still obtain the registration voluntarily at day one. So what is the purpose of obtaining the GST registration on voluntary basis? This is because if I have something, if I am like doing a business, let's say I am selling shoes. So if I'm purchasing something and I have to pay the GST, because my vendor is registered in GST, so they'll collect GST from me. And if I'm selling that to the customer, I'm not able to collect the GST because I'm not registered in GST. So whatever I've paid to my vendor become my cost. So for me, it become mandatory to obtain the GST, even if my turnover is not crossed. Reason being, I am making an element which is I am paying as a GST to my vendor. I am considering it or adding it to my cost. So my product become more costly. So it will be beneficial for me to obtain the GST, collect the GST from the customer, and I can adjust whatever I've paid to my vendor from the GST that I've collected. So this is, if let's say if you are paying rent and there is a GST on the rent. So it become your cost if you do not have a GST and you are not collecting the GST. If you are in a situation where there is no element of GST on your supply chain, then in that case you can have the option to obtain the GST once you cross the prescribed limit. Then there is a other situation also, which is composition scheme. Composition scheme is something that help you to obtain the GST registration, but in that case, you are not supposed to collect the GST from your customer. This is something that, let's say, you are doing certain business and you are doing giving certain services. Then in that case, you can obtain the composition registration, wherein you are not supposed to collect the GST from the customer. You have to pay it from your own pocket. That is just 1%. So while you do so, because in the composition scheme, the registration process is easy, even the compliance process, that the GST returns and everything is very simple. Even though you are not supposed to maintain the records of your sales, of your purchase, nothing will be done. You have to just pay 1% of all the sales that you have done in the particular year or a particular month. But yes, there is a certain turnover limit that beyond that, once you cross that certain limit, you have to mandatorily convert your composition registration into a normal registration. So what is the turnover limit basically? So in case in case of goods, it is 1.5 crore, and in case of services, it is 50 lakh. So in case of goods, if you have a turnover of up to 1.5 crore, you can go for the composition scheme, and in case of services, it is 50 lakh. So who all actually think of getting registered in the composition scheme? The small traders or the shopkeepers, they actually have that privilege of not collecting, not maintaining any kind of record, not filing the returns, or not want to be compliant doing the counting and everything. So they actually think of getting registered under the composition scheme. And yes, one more important thing, that if you are registered under the composition scheme, you are not supposed to sell interstate. Like from one state to another state, you cannot sail, because for sailing the interstate, like from Haryana to Delhi, if you are selling, then you must have the GST registration. If you have the composition GST registration, you cannot do the interstate, you can just do the intrastate. Now, as we have discussed that we have to obtain the GST registration, we have to register ourselves for the GST. So why we have to obtain the GST registration, and why we have to obtain the GST registration? Because we are doing certain transaction. What are the transactions? Basically, we are doing certain supply. If we are doing certain supply, and then we have to obtain the GST registration. What is supply as per the GST Act? Lease. If we are giving anything in lease and we are collecting the rent, then lease will be considered as a supply, and we have to obtain the GST registration. If we are selling the license, even the permission of using the license, then in that case also we have to obtain the GST registration, and license, selling or license or giving the permission to use the license will be considered as supply. Sale, yes, if we are selling the ownership of the goods, then it is applicable. Transfer of goods, like if we are transferring the right to use the good or without transferring the title, then also it is something like we are giving the goods on a rental basis, then also that transfer will be considered as supply. Barter, yes, if I'm selling something to you in exchange of some other goods or services, then also GST is applicable. If we are disposing something like disposing of scrap sale, everything, and in that case also the GST is applicable. Sale of second-hand goods. A lot of people have queried that in case of second-hand goods, whether the GST is applicable. Yes, it is applicable. Let's say if you have purchased a machinery for a manufacturing purpose and now you are selling it to someone and you are registered under GST, then yes, GST is applicable. In case you have a motor car and if you want to sell it in a personal capacity, like like a individual, I have a motor car and I want to sell it, then GST is not applicable on a second end. But if you're running a business and if you own a car or a motor car in the name of the business and now you want to sell it and you have recorded that asset in your books, then if you're selling it, then GST is applicable. So what are the most important elements of supply? Supply has two important elements. Like if these two elements are not applicable, then this transaction, any transaction, if these elements are not available, then will not be considered as supply. And if it is not considered as supply, then it will not considered under the aggregate turnover. And if it is not considered under the aggregate turnover, then we are not supposed to take the GST registration and GST is not applicable. So what are the two elements basically? Supply is done for a consideration. If there is a consideration, only then GST is applicable. Let's say I am selling something for free, then GST is not applicable. It should not be the transaction should be free of cost, then GST is not applicable. But if we are managing the transaction in such a way that we are avoiding the GST, in that transaction will not be considered as out of the preview. But if there must be a consideration, because the GST is applicable on the consideration. If we are doing something for free, let's say I'm doing this webinar, or if I'm providing any kind of services for free, then there is no GST because there is no consideration. But if I am taking some other benefits just to avoid the GST, then that situation will not covered under here, or that will not considered as to be not GST is not applicable. Then supply is done in course of furtherance of business. Yes, if I'm doing something in a personal capacity, like if I'm doing something like I'm doing some housework, then I cannot say like even though I'm collecting something out of that, then also it cannot be said that GST is applicable, because I have to do something for my in my business, like in a professional capacity, then we can say that GST is applicable. If I'm doing something for my friend, let's say I'm collecting some consideration out of that, but I'm not doing it for my business, I'm doing it just helping her out or anchoring or whatever I'm doing, not doing for my business, in that particular case GST is not applicable. So there are two definite elements to consider some transaction as supply. One is there must be a consideration, and that transaction must be done in the furtherance course of business. Then classification of GST. So there are basically three kind of taxes classification. We call it CGST, SGST, IGST, and UTGST. So what are these? I think you have all seen the CGST, SGST kind of bifurcation on the different kind of invoices in your day-to-day basis. If you are going to a restaurant, you must have seen that they have charged CGST, SGST, or maybe IGST, UTGST, not IGST. So what are these basically? So we have categorized our GST into four parts, specifically three parts. So central GST is the element of GST which needs to be deposited to the central government. SGST is the element which is collected by the state government, and IGST is the element if we are doing some transaction interstate, like from Haryana to Delhi, from UP to Delhi, or UP to Haryana, then in that case IGST is applicable. And if we are doing certain transaction from Union Territory, like if we are selling from Delhi to Haryana, then instead of if we are doing certain transaction between Delhi, like from Delhi to Delhi, then in that case, instead of CGST, it will be UTGST, because Delhi is a union territory. So for all the union territory, there will be UTGST instead of CGST. For all the states, there will be two elements if they are selling intrastate. Like if there is a transaction within Haryana, then there will be CGST and SGST. If there is a transaction from Haryana to Uttar Pradesh, then there will be IGST and UTGST I've already explained. So we have four taxes. So how we charge the GST. So there are different rates under GST. There are total 3% is the GST rate, 5% is the GST rate, 18%, 28%, and 0. So there are total 5 rates under GST. So whenever there is an intra-state transaction, like within the state, so whatever GST rate is applicable based on the goods and services we provide, it will be divided. In case it is an intra-state, so 3% will be divided 1.5% into central, 1.5% into state. And if it is an interstate, like from one state to another state, then 3% will be totally applicable as per integrated GST. So I think I have given you the brief, like what are the different rates, what is GST, when we have to obtain the GST registration. Now, what is letter of undertaking? Wherever we have a GST registration, if we do not have a GST registration, then there is no way we can have the letter of undertaking. But if we have GST, means we have already registered in GST and we want to do some exports. As you have know that in case of export, our government have a criteria that we do not want to charge GST or any kind of taxes on the export transaction, because we want to bring in the foreign currency in India. For that, we can keep our prices at a lower end, and we do not want to put the burden of the indirect tax on the foreign countries. So that is a way we don't charge the GST in case of our export. So whenever we are doing certain export transaction, what we can do is we can obtain the letter of undertaking. There is a small process of obtaining the letter of undertaking. Once we got registered under GST, we can obtain it. This is letter of undertaking, just the authorized signatory of our GST registration of our company is providing an undertaking to the government that whatever sales or export mentioning in the GST, wherever we are not collecting the GST, is actual the export. So it means that we are just assuring the government that whatever export transaction we are doing, we will not collect the GST, and all the domestic transaction we are doing, we will collect the GST. So this is a simple process that we have to follow whenever we are doing export transaction. And whenever we have to obtain the LUT, we have to obtain or renew the LUT every year. So like if we are doing a transaction, let's say for 23, 24, 25, we have to obtain the LUT first, and every year we have to obtain the LUT for each financial year. And if we do not have a LUT, then we have to pay the GST. Even though we cannot charge the GST from our overseas client, but we have to consider that whatever we have collected from the overseas vendor, the government or the department assume that that is inclusive of GST, and we have to pay the GST from our own pocket, because on the export invoice, it is not allowed to charge the GST. Then I have explained you about the reverse charge. What is basically the reverse charge? So let me give you another more detailed idea about what is the reverse charge. So the supplier of goods and services, in normal scenario, supplier of goods and services have to collect the GST and pay to the government. But in case of reverse charge, supplier of goods and services provide the goods and services to the receiver. Receiver will pay the GST. Receiver will pay the GST to the government, and receiver will take the credit of the GST. So this is a complete list. There is a complete list on which reverse charge is applicable. So I have already told you 3, like in case of goods travel agency like GTA, in case of legal services, in case of import of services, these kind of reverse charge mechanism is available. And in case of reverse charge, the receiver have to obtain the GST registration even if the transaction is just for 1 rupee. So do you take any kind of import of services? Yes, we generally take import of services. We do the import of services in our normal business cases, of normal business, like if we are obtaining the Microsoft license, if we are obtaining different kind of license overseas, like license of different clouds like Dropbox, and even we are taking the Shopify services. So they are billing us from different other countries, like Shopify generally bills us from Singapore, and for cloud services, Amazon bills us from Singapore, so AWS services. So if we are taking these kind of services, then we are doing the import of services, and we have to do the compliance. We have to obtain the GST registration if we do not have, and we have to pay the GST under reverse charge. Then this is a slide wherever we are discussing about the refund of GST. Just a second. So in certain situations, we can obtain the refund of GST. Which GST we can take the refund? So whenever we are purchasing something, like I'm a chartered accountant and I'm running my own firm and I am paying GST on my rental services, then I can take the input of these rental services. But let's say I am not doing any domestic services. I'm not providing any domestic services. I provide all the services to my international client. So as I already told you that if I'm providing services to my international client, I'm not supposed to charge the GST. So what happened to all the input? Like if I'm paying as a rental services, or if I'm collecting like any GST invoice for my laptop or for other services that I have something GST input that I've paid, then what I'll do with my GST input? To that GST input, I can claim the refund. So there are certain situations wherein I can claim the GST input as there are certain conditions where situations wherein the GST input paid can be claimed as refund. So what are basically those situations? Inverted duty structure. Inverted duty structure is the situation wherein I am purchasing something at a GST rate, let's say 18%, and I'm selling something at a GST rate of 12%. So whatever I'm purchasing, I have to pay GST at a 18%, and what I'm selling, I have to pay a GST of 12%. So there is always a situation my output GST will be lesser because it's 12%, and my input GST is always higher because it's 18%. So the GST got accumulated year on year basis. So what I can do is I can take a refund because anyhow it got getting accumulated. So this structure wherever input GST is at a higher side and output GST is a lower side. So let me give you an example. If we are purchasing a fabric, cotton, 18% GST, and we are selling a shirts on which GST is applicable at 12%. So 6% gap is there and we can take the refund of it. Then deemed export. If we are selling something to SCZ, SCZs are the special economic zones. Wherever if we are selling anything to SCZ, SCZ is the area which is considered as outside Indian territory. So it is something called as deemed export. If we are selling something to SCZ, it will be considered as we are selling it outside India. So this sale, if we are selling something to SCZ, will be considered as deemed export. And because if we are selling something to SCZ, we are not supposed to take the charge the GST from them. So all the input getting accumulated, but we are selling to SCZ and we cannot claim the GST from them. So all the GST input got accumulated and we can take the credit of it. So we can take the credit and ultimately we can take out the refund of it. Person holding UIN, yes, there is special category like embassies can obtain the UIN, unique identification number under GST, and they can, if they have any input collected, then they can take the refund of it. If we have excess electronic cash ledger, let's say if we have paid the GST mistakenly, let's say we have to pay the GST 2 lakhs and mistakenly we have done the transaction twice and now we have paid the GST 2 times, then excess amount is 2 lakh and we can claim the input as a refund. So whatever we have paid excess, we can claim the refund. And in case of export, just like in case of deemed export, we are not charging anything to SEZ. If we are doing actual export, we are not charging anything to our overseas clients. So whatever we have paid as input, we can claim the refund. Excess payment of tax due to mistake or inadvertence, yes. Person related required to deduct TCS under GST. So if a person is collecting whatever TCS is collected, let's say if I'm a vendor and I have registered myself as a supplier on the different e-commerce platforms. So e-commerce platforms start collecting my TCS on all the sales done through that e-commerce platform. So all the amount which is collected as TCS will be reflected on my portal, and if that is lying on my portal and I do not have anything to set it from, I can claim a refund. Supply made to SCZ or developer, this is just like a deemed export. Like if we are making any supplies to the SCZ or developer on payment of IGST or bond or LUT, like if we are making any supplies to SCZ, then in that case, whatever balance we are accumulating as input, we can claim as a refund. There are certain other classes or a situation also wherever we can claim the GST refund. One is that if we are closing the business and we have an input lying in, and we can claim an input, but that depends upon case to case basis. Like if you also have an inventory lying in, then the officer will see like how you will be selling the inventory or how we are disposing of the inventory, and if they allow, then the GST refund is possible. So this is all about the GST. If you have any query, then we can discuss the queries first before moving ahead with the other session on other topic on income tax and the financial statements. Someone have mentioned that they are not able to hear the voice. Is it still a problem or my voice is audible to all?
It was audible, ma'am.
Okay.
Yeah, it was very clear and audible to us.
Okay, so if anybody have any query, or we can take a 5-minute break and then we can start with the, if nobody has any query, then we can take a 5-minute break and we can start
Ma'am,
again with,
Divya,
ma'am, can I ask a question?
yeah, please tell me.
Ma'am, just one question, regarding refund, I did not understand. See, for example, I'm in the business of apparels, right? So I pay GST to my vendor when I purchase my goods, right? Now, what I understood was that if I give a receipt to my consumers, which has a GST component, then that I can claim as a refund.
What I was mentioning is कि जैसे आप अगर जो भी परचेज कर रहे हो उस
Yes.
परचेज पे आप जीएसटी पे कर रहे हो, लेट्स से 18%, और
Yes.
जब आप सेल कर रहे हो उस पे आप जीएसटी पे कर रहे हो 12%. तो इन दैट पर्टिकुलर सिनारियो आपका जीएसटी हमेशा एक्यूमुलेट होता रहेगा. जो इनपुट एलिमेंट है वो हमेशा बढ़ता रहेगा, बिकॉज आप हमेशा परचेज पे 18% पे करोगे, सेल पे 12% कलेक्ट करोगे, और वो हमेशा जब भी सेट ऑफ होगा आपका आउटपुट हमेशा इनपुट से कम होगा. तो इस सिचुएशन में जो आपका अमाउंट एक्यूमुलेट होता जा रहा है, आप उसका जीएसटी रिफंड क्लेम कर सकते हो. सेकेंड सिनेरियो इज कि अगर आप परचेज कर रहे हो 18% और 18% पे, और आगे आप एक्सपोर्ट कर रहे हो. अब आप अगर आगे एक्सपोर्ट कर रहे हो तो आप जीएसटी कलेक्ट ही नहीं करोगे. अगर आप जीएसटी कलेक्ट नहीं करोगे तो आपका हमेशा इनपुट एक्यूमुलेट होता रहेगा. अगर इनपुट एक्यूमुलेट होता रहेगा तो उसका क्या कर सकते हैं, तो उसके लिए हमारे पास प्रोविजन है कि हम उसका जीएसटी रिफंड क्लेम कर सकते हैं. तो ये दो सिचुएशंस हैं.
But ma'am, in my case, it's the other way around. Like I am paying 5% because my goods cost less than 1,000 when I purchase
Mm-hmm.
them. So I am paying 5%, but ultimately when I'll be selling, it will be I think 12%. So will I have
Mm-hmm.
to pay more GST to the government? 7% extra? Will that?
Actually, that depends upon case to case basis because actually the point is whatever product you are purchasing might be the GST rate is different, and if you are just selling it, then might be the rate is different. So
Yes.
that depends if you are like doing something manufacturing, and in case of apparel specifically, that depends upon the rate. Like if you are selling it above 1,000 or purchasing it below 1,000 rupees, then the rate might differ. So it's not like that you have to pay 7% more. It actually depends upon the product you are selling.
All right.
Yeah,
All right. Thank you.
you're welcome.
Excuse me, ma'am.
Yeah.
I'm into education, ma'am. I'm having my own preschool. So I just wanted to know that whether GST is applicable to us also.
In education, till I think if it is till 12th is exempted from obtaining the GST registration. So this is a special category that education GST is not applicable on the education services. But if you are, let's say, in a coaching services or providing some professional coaching, then GST is applicable. But if it's the essential education, then GST is not applicable.
And ma'am, it is not applicable anywhere in India, no?
Yeah.
Thank you. Thank you.
Ma'am, just one more question I had to ask you. In the point number one, when we were discussing the mandatory GST registrations, in the interstate supplies, I think that also comes under mandatory registration, no? Like even with
Yes.
one
If
transaction. Sorry.
yeah, please go ahead.
No, so even if we are doing from day one, 1 rupee transaction between Delhi and Noida, Delhi and UP, then also there will be mandatory registration. Is it not?
Yes, it is. But basically, the thing is, actually, what is happening if you are selling goods from Delhi to Noida, then because you are also moving the goods practically, then people are obtaining the GST registration because anyhow, if they are selling it or transferring the goods from one place to another, then they need to have a e-way bill in place. For that, they are obtaining the GST registration. But in case of services, even though it is mandatory to obtain the GST registration if we are doing interstate, but people are not doing it because there is nothing to track.
Okay, okay. Thank you. Thank you, ma'am.
Yeah.
I have one question. I might
Yeah.
already know the answer, but I thought I should run it by you. I
No
have an
problem.
IT firm, okay,
Mhm.
and
Then we'll have Korean
uh,
dinner and then
Luca, can you mute yourself, please? Thank you.
sorry.
No problem.
So, we happen to provide services outside India, okay, and
Mhm.
sometimes there are services which are not directly given by us, but we engage some third party from India itself, okay. So what happens is that when we are billing to the client, we are not getting any GST from them because, of course, outside India it's not applicable. However, when we are, passing on the billing or we are paying it to the sub vendor, we have to give. The GST is incurred, and that really because on one hand I am not getting it, on the second hand I'm giving it to somebody else, so it just makes the cost of it very expensive for me. 18% is a huge amount. I mean, is there a workaround that I can not have to pay that GST or no? Because I have not
So
utilized the services directly either.
So the point here is, if you are doing it, let's say, if you are selling the services altogether export, if you are just have the overseas clients and all the GST which is collected because you are subcontracting or giving the some work to some other firm which is based in India, then charging you GST, then you can claim the refund of this GST report.
So, I think 99% of what we earn is from, outside India. 1% here and there, we do small projects for Indian companies as well. So, in that case, also, I can claim the GST?
No, in that case, if you are claiming the GST, you can set it up against whatever GST you have paid to your sub vendors or while subcontracting. But if the GST got accumulated, the input got accumulated, then you can claim the refund.
Okay. And
Yeah.
it's a simple procedure to claim the refund, or?
Yeah, so the procedure is simple, but you have to at least reach out to one of the professional, because ultimately there is a CA certificate required that you have to submit whenever you are claiming the refund. So there is a complete process that we can discuss after this, or even on the WhatsApp.
Understood.
Yeah. So I'll explain you the complete process, like how you can claim the refund.
Thank you so much. Because no, RCA has not suggested it yet, but we were sure that we should be doing something about this GST, because we have a lot of GST accumulated, and we really never, we are not able to knock it off against what we are receiving.
So there is a way out that you can claim the input, because ultimately you are doing benefit. You are giving benefit to the economy because you are bringing in the foreign currency. So there is a option given to all the suppliers who were like your kind, wherever you are bringing in the foreign currency. So there is a benefit given to you that you can claim the refund of your input.
Thank you so much. I would like to understand that offline, probably. Thank you so much.
Offline from.
Just one thing I think I would like to take forward from what Hanish said is that probably there's a question in my mind also, is that see if so she is into an export of services as well as some domestic services, wherein her supply say comprises of 90% exports, 10% domestic, and her input that is there for her to set off. Would only be set off to the extent of this 10% domestic, and the extra, I mean, is there any pro rata set off? I mean, say, for example, if the input is, say, only 10 rupees, whereas my domestic output is, say, so, for example, 12 rupees. So do you mean to say that I can offset the entire input of 10 rupees against my 12 rupees, or will there be a 90-10 pro rata set off? No, not like that. The full. Okay.
Yeah,
Thank
you can totally set off the input against your domestic billing. And if you are not able to completely set off your input against your domestic billing, you can claim the refund.
Okay, cool. Thank you.
Welcome. Any other question or any other discussion required by any of the participants? If you cannot just unmute yourself, you can type it over the chat box also. I can just read and reply. So I think nobody has any other further question. One more point I want to mention, like nowadays, because GST department, like we have the GST got implemented back in 2017, and nowadays people are getting notices for, let's say, 17, 18, 19 financial year, or 19, 20. So people are continuously getting some notices that this is not matching, or you have claimed excess input, or you have not paid the GST liability. So these kind of notices everybody is receiving, whosoever is registered into GST. So don't get panicked. You have to just submit the reply first. So whatever is the situation, even if you have mistakenly taken the credit extra, or whatever the situation, first of all, you have to do the detailed reconciliation and submit the reply on online portal. Do not on the first point itself, do not visit the department. Submit the reply on the online portal itself. And if they have any other further query, they'll reply online, and then you can, and they will give you the hearing opportunity that you can visit, and they'll give you a date and time. Then at that point, you can go visit and take all the documents together with you. Either you are going or any of your authorized representative is going to represent your case. In that case, they'll take the authority letter from you and take all the documents and submit it to the department. So nowadays, what I'm seeing is people are getting panicked because of these kind of notices, but these are the automatic notice. Even if you have taken extra input, let's say for 20 rupees, you are getting a notice. So don't get panicked, just have a reconciliation done at your consultant times and try to submit it online first. So I think I'm concluding the session, particularly for GST. Now we are moving ahead with the income tax part, which is a direct tax, and I am really apologizing for not having a PPT specifically for the other part of the session. So regarding the income tax, which is a direct tax, our compliances starts with the PAN number. For income tax compliances, either we are running our business either in the form of proprietorship, partnership, company, private limited, public limited, LLP, or either a firm. So whatever our legal entity is, we have to obtain the PAN number. If we have a proprietorship, then the PAN of the proprietor will be suitable for conducting the business. Let's say if I'm a proprietor, I'm running a proprietorship firm. So my proprietorship firm do not have a separate PAN. My PAN and my proprietorship PAN is a single thing. But if I'm running a private limited company, then my PAN and the PAN of my private limited company will be separate, and the process or the compliances in the income tax starts when you have a PAN number. Even you cannot obtain the GST registration if you do not have a PAN. So the starting point for the compliances with the income tax starts with the PAN. So what is the process of obtaining a PAN? If you are a proprietorship firm, partnership firm, then you have a proprietorship firm, partnership firm, then you have to obtain the PAN by yourself. Like there is a process, you have to fill in the form and submit the relevant documents. In case of individual, everything happens if you have a proper Aadhaar card and which is linked to your mobile number, then all the process is automatic and you will get a PAN number in 3 or 4 days. But if you do not have Aadhaar, which is linked to your phone number, which is nowadays very lessly possible, which is least possible. But in that case, you can submit the documents physically, self-attested documents to the department, and your PAN will be couriered to you in 7 or 10 days. Now, in case of partnership firm, you have to obtain the PAN by submitting the physical document, because partnership firm do not have the Aadhaar card. So Aadhaar card validation possible only in case of individual PAN. And if we talk about the private limited or other form of corporate entities like LLP and private limited company, in that particular case, whenever you are registering the company or the LLP, the PAN comes along with the registration. So there is no separate application that you have to file for the PAN. It will automatically come along with the registration. Now, let's say if you have two PAN, how is it possible that you have two PAN? Right now, it is not possible, but if you have, because before 2021, people have two PAN, because let's say if I have one PAN and I'm not finding it, I lost it actually. So rather than submitting the application for re-obtaining my original PAN, what I'll do is I'll submit another application for obtaining a new PAN. Then I'll have two PAN. So keeping two PAN is an offense and there is a penalty. So in any of the situation, if you have two PAN of yourself, or even if you're for your company, then in that case you have to surrender one and you have to keep the only single PAN. So every entity, every individual must have one PAN. Once you'll have the PAN, then all the compliances starts. The compliances for filing the ITR, income tax have a compliance for filing the ITR. If you have a turnover, if you have a profit, in case of company, if you have even a losses also, you have to submit the ITR, and ITR compliances are annual compliances. ITR is basically the tax return. So you have to submit the annual ITR with the income tax department every year. So some people think that if they do not have any kind of income in their company, then they are not supposed to file the ITR. No, even if you are having a zero revenue, zero profit, just expenditure in, even if no expenditure, then also you have to submit the ITR. So ITR compliances are mandatory. In case of individual, yes, you have to submit the ITR if you have certain income above the exemption limit. So in case of individual, there is an exemption limit for 2.5 lakhs. If you have income above it, you have to submit the ITR. In other cases, there is no exemption limit. For individual, there is an exemption limit. And ITR, filing of ITR is an annual task, and there is a timeline. Like for in case of individual, you have to submit the ITR by 31st of July every year. For the precedent year, like for 23-24, we have to submit the ITR by 31st July. And in case of companies or LLP or partnership where audit is necessary or audit is mandatory, then in that case, ITR needs to be filed by 30th September. What is audit basically? So income tax department compulsorily require us to conduct an audit for our transaction or for all our transaction. In case of individuals also, like proprietorship firms also, partnership firms also, all the kind of assess or all the kind of legal entities, the audit is necessary if the turnover based on the turnover criteria. If the turnover is more than certain limit, then audit is necessary. So what is the limit? In case we are into a business, then the turnover is 2 crores. If our turnover in a year, turnover is different and net profit or gross profit is different. Turnover is the sales. If we have turnover more than 2 crores in a certain particular year, then tax audit as per the Income Tax Act is mandatory. And if the turnover is less than 2 crores, then tax audit as per the Income Tax Act is not mandatory. If the tax audit is not mandatory, then the filing date is 31st July. If the tax audit is mandatory, then the filing date is 30th September for ITR. Then in case of we are running a professional service, we are running a business of professional service. Like me, I'm a chartered accountant, I'm giving professional services. Now the turnover is not 2 crores, the turnover is 1 crore. So if I have a turnover of 1 crore in any particular year, then I have to conduct the tax audit. And for the tax audit, even if I'm a proprietor, I have to file my income tax return by the 30th September. But if there is no tax audit, then the date is 31st July. So this turnover limit of 2 crores or 1 crore can be increased. Okay, so what is the point here is this turnover limit of 2 crores and 1 crore can be extended to 10 crores. Like there is no audit till 10 crores if all the transaction we are doing, purchase, sale, and everything we are doing, if we do it in through banking channels. If our cash transaction are less than total cash transaction, either purchase or sale cash transaction are less than 5% of the total turnover. Let's say my turnover is 9 crore and my cash and purchase, cash sale, purchase, sale, or whatever cash transaction, if it is less than 5% of that 9 crore, then in that case, there is no audit till 10 crores. No audit, tax audit we are talking, because we are discussing here about the Income Tax Act. So we are here concerned about the tax audit. So there is no tax audit until 10 crore. But if we are dealing too much into the cash transaction, then there is a tax audit, even the turnover is more than 2 crores. So if we are paying, there is repetitive question that I've received from various people, that if we are doing transaction, what is mean by the banking transaction? Let's say if I'm doing a transaction from my company's account, then that transaction will be considered as banking transaction. But if I'm doing transaction from my personal account and I'm running a company and the transaction is not getting done from the company's bank account, then in that particular case, we can consider the transaction done from a personal account, from my own personal account on behalf of the company, as a banking transaction. But yes, this is a situation that the assessing officer can raise a point that this transaction will not be a banking transaction. You have to conduct the tax audit, even if the turnover is below 10 crores. So we have to keep in mind, first of all, for obtaining this, for considering this turnover limit of 10 crore, we have to make sure that all the transactions are done from the banking channel. Banking channel means the banking channel of the company. Even if we are doing the transaction from our personal account, we have to make sure that we have appropriate proof that we can show it if later on, if there is some problem or notice we receive. So so the annual compliances are the ITR compliances and the auditing compliances. In case we are not come under the audit provision, whatever kind of entity we are, except the corporate entity, we have to submit the return by 31st July. And if we are under the obligation of audit as per Income Tax Act, then the timeline is 30th September. 30th September is a timeline to submit the ITR and the audit report and the ITR. And in case we are company, then Companies Act asks us to conduct the audit. As per the Companies Act, there is another kind of audit, that is a corporate audit. So if we are company or running a company, then in that case, we have to do a statutory audit as per the Companies Act. So if we are companies, then the timeline for 31st July is not applicable in our case. We have to anyhow submit our ITR by 30th September. So 30th September is a due date for all the companies. 31st July is a due date for all the entities other than companies and other than tax audit. And 30th September is a due date for companies, even if tax audit is done or not done. And 30th September is a due date for other than 30th September is the due date for entities on which tax audit is applicable other than companies. So I think it's got a little bit confusing. So let me tell you one example here. Let's say if I'm a proprietor and there is no audit, then 31st July is a due date for filing the ITR. And I'm a proprietor, and if tax audit is applicable, then the due date is 30th September. If I'm a company, then there is no timeline that is 31st July. If anyhow I have either tax audit is applicable or not applicable, my due date for filing the ITR is 30th September only. Why we are filing the ITR? Basically, whatever we are doing business, whatever purchase, sale, we have to report that to the income tax department, because income tax department is charging income tax on the net profit. What is net profit? Whatever sales we have done, whatever expenses we have done. So sales minus expenses becomes the net profit. So net profit, on the net profit, we have to pay the tax, the income tax to the government, and that's why we have to submit the complete report to the income tax department, so that they can make sure that whatever tax element we have paid, we have actually paid the right amount. So when we have to pay the tax, as I've mentioned that we have to file the return annually, but there is a provision of making the advance tax. So all the department, they give us the option to file the return on annual basis. There is no problem, because we are anyhow submitting the reports to them. But for the taxes, they want us to do it on quarterly basis. So in case of non-companies, like an individual, there are 3 dates for advance tax that we have to make the payment. That is 15th September, 15th December, and 15th March. So if there is any tax liability, we have to make the payment by these date. And if we do not make the payments by these dates, then there is an interest element that will be calculated once we'll start making the payment for the tax. In case of companies, there are 4 advance tax dates, that is 15 June, 15 September, 15 December, and 15 March. So every quarter, last month, 15th is a due date for making the payment for the advance tax. And if you are not making the payment, then there is an interest element that you have to pay whenever you are making the payment after 15th March. That is the last installment date for the advance tax. So it means that compliances for the income tax starts with PAN. Once you obtain the PAN, you have to start making the payment on quarterly basis, and you have to submit the return, if non audit, on an annual basis. And if there is an audit, then you have to submit the audit report. Then the question arises is either you are supposed to submit the audit report by yourself. No, audit is done by independent chartered accountant. They'll conduct the audit, they'll study your books of accounts, and they'll give you a certificate that they have obtained certain objections or there are certain problems, or if there is no problem, then they'll give you a books of accounts a complete fair view and sign the report and submit it to the income tax department. And then once they'll submit the report to the income tax department, you can file your income tax return. Now the question is, if the audit is applicable and you submit the return without the audit report, then what happened? Your return got defective, and in that particular scenario, you are supposed to file the fresh return. And even if you have filed the earlier return on timely basis and the return got defective, now you have to submit the fresh return, which will be considered as fresh return, and you have to pay the late penalty. Defective return will not be considered whenever you're filing the revised return because of the defective return earlier. So this is the scenario. And one more point, let's say if you have any losses in case of proprietorship firm or in case of company and you are not filing your income tax return, then in that case, those losses are not about, like, you cannot carry forward the losses. Losses will be carried forward only if you are filing the return, that too on timely basis. If you are filing the return on late, like with penalty, then the carry forward losses will not be carried forward. For carry forwarding the loss, you have to file the return on timely basis. The due date is 30th September for filing the ITR. Then apart from the this compliance of filing the income tax return or obtaining the PAN and conducting the audit, there is another compliance, that is TDS. Like if you are running a business, then you have to obtain the TAN number. First compliance is the PAN number and then the TAN number. TAN number is a tax deduction number. So whatever you have to pay, like whatever salaries or expense you are paying, you have to collect or deduct certain amount and submit it to the department. Whatever, let's say if you are paying salary and salary is let's say 10 lakh, which is above the exemption limit for that particular individual, then you have to deduct the TDS. If you are paying the professional services or professional fees to someone, let's say to me, if you are paying certain services, then in that case you have to deduct the TDS. What is the purpose of deducting the TDS? Because if you are deducting the TDS on my fees, then it becomes mandatory for me to report that service in my income tax return. So this is a way that, because you are already a person who have a PAN and you will be showing your purchase in your books of accounts. If you deduct my TDS, then it becomes obligation for me also to report my services or service invoice. If there is no concept of TDS, so I might charge you GST, pay the GST, and then delete the invoice and do not show it in my income tax and do not pay the taxes. But you deducted my TDS, then it will automatically reflect it in my account and I have to report that. So this is a process that there will be no such situation where the invoices once generated, amount collected and not reflected in the income tax return filing. So there is a concept of TDS. There are different sections in the TDS altogether, the chapter of TDS under income tax. Wherever there are different eligibility criteria, different applicability criteria, and different rates. Like in case of rent, if you are paying rent, yes, you have to deduct the TDS 10%. If you have taken some machinery on rent, yes, then also the TDS is applicable. You have to deduct TDS. So you are not supposed to pay the TDS from your own pocket. Like if you have to pay me 1 lakh rupees on my services on the basis of service invoice, then you have to just deduct 10% because for the professional services, 10% yes, TDS rate is applicable. So you have to deduct 10%. That's it, 10,000. Then you can remit 90,000 to me, and on me and my behalf, you can just submit 10,000 to the government. And for me, whatever deducted as TDS, I'll be claiming that as my income tax whenever I'll be filing my 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 income tax return annually. So TDS compliances are uh, uh, done on quarterly basis. So whatever TDS is deducted will be submitted to the government on monthly basis. Like in the month of April, you have deducted certain TDS. You have to submit that to the government by 7th of next month. And on quarterly basis, you have to submit a report that you have deducted the TDS of certain people, and you have to download a form 16A or 16 in case of salaries and submit that form to the respective vendors for whom you have collected or deducted the TDS. So there are TDS compliances that lies in the income tax, and then there is a ITR or the annual compliances. So in TDS compliances, TDS is done, payment is done on monthly basis, return filing is on annual basis. For employees, there is a form 20 4Q that you have to submit as a TDS return, and for other then employees, like other than salary, the form is 26Q, and the compliances for salaries and the non-salaries are altogether same, like monthly payment and quarterly filing of return. If you are making a payment outside India for any import of services, I have mentioned that for import of services, you have to actually pay the GST in reverse charge basis. Yes, you have to do the TDS deduction also. And for doing that deduction, there is no monthly or annual compliances. Actually, whenever you are making payment outside India, you have to deduct the TDS and submit it to the government next month till 7th. And the return filing is as same, like you have to quarterly file the return. So these are the compliances for the TDS and for the income tax return that we have to take in complete year. So if you have any question regarding the income tax compliances, we can take it. Otherwise, I'll be explaining one more topic, that is the financial statements.
Ma'am, I have one query with me. As I told you
Yeah.
that I am into preschool business and I'm
Yeah.
into sole proprietorship only. So I will be taking that PAN number in by the name of school.
It's a proprietorship form, right?
Yes.
And then your own PAN number will suffice the purpose, and you have to submit the return like the ITR in your own name because you are running it as a proprietorship form. So proprietorship form and the proprietor are a single entity.
Yes.
There is
Yes,
no,
ma'am.
yeah. So no separate PAN is required.
Because ma'am, I'm due to I was about to open current account. So many banks were asking PAN number. They should not ask me when they know that it is a sole proprietorship.
You
They
can submit
wanted
your
PAN number for the school actually.
you can submit your own PAN and you can tell them to give a declaration that you are running it as a sole proprietor.
And ma'am, how is it possible that I want bank account by the name of school only? Because I don't want, school accounts in the name of mine. So they have opened all the accounts in my name, by my name only.
So yeah, so there is a process because anyhow you have to submit certain document in the name of the school. So GST is not applicable.
Yes.
And PAN number is in your name. So
Yes.
there is no document with the bank to submit to give you a bank account in your school name. So here there is the other certificate, that is MSME.
Okay.
MSME certificate that any entity can obtain, even they do not have a GST. MSME is a micro, medium, small enterprises. You have to obtain that certificate wherein you can just mention legal name as your own name like the name of the proprietor, and trade name as the name of your school. So you are trading or whatever transaction or business you are doing in a trade name. So that certificate you can submit to the bank, and on the basis of that certificate, they'll open the bank account in your school name, because they also need to have certain kind of document.
And ma'am, now
If-
the banks which have already opened, so that is also if I submit now.
Yes, you can submit and ask them, because you are running a current account. Even if you are running it in your own name, that is also not a problem if we just see it legally. But for the people, like you are receiving the funds in your own account, so might be it is not giving a good impression
Yes.
to the person who is giving you the making the
I
payment.
understand.
So you can
Yeah.
so you can just ask the bank to change the name, because you are running a proprietorship firm, and so that is the only way. If you are like as you are running a school and GST is not applicable, if you are running any other business and GST is applicable, and then on the basis of GST, people bank account can add the name of, because in GST also there is an option for trade name.
Okay.
So in your case, you can have an MSME certificate.
Fine. Thank you, ma'am. Thank
You're
you.
welcome. Yeah. Any other question from anyone? No, we can proceed. Okay, cool. So let me take up the last topic of the session, that is a financial statement. So what is a financial statement and to whom this is applicable? So financial statements basically contain the profit and loss account, the balance sheet, and the cash flow statement in some cases, and in some cases it's not. So what is financial statement is? Financial statement is balance sheet and the profit and loss account and cash flow statement. So what is the profit and loss account? So profit and loss account is basically the statement which reflect your total turnover, all the expenditures, and actually the profit element. So why we need to prepare this profit and loss account? Because on the basis of this profit and loss account, we'll make the payment of income tax, and actually the person who is collecting the department collecting the income tax, they also need to have an overview of total sales, total expenditures, and everything. So we have to prepare a profit and loss account, that is we call the income statement. Then what is a balance sheet? Balance sheet is basically the statement of our assets and the statement of our liabilities. So all the assets and liabilities will be reflecting. So we call it as a financial position. So whatever assets we have, in whichever whatever liabilities we have, assets means which is fixed assets, current assets, and our cash balance, our bank balance, everything needs to be reported in the balance sheet. And whenever we have to conduct the audit, like whosoever is conducting your audit, they have to sign the asset balance sheet and the profit and loss account. So basically, to overview your business, you need to have a financial statement. To whom it is applicable? This is applicable to all the corporates to mandatorily prepare their balance sheets and the profit and loss accounts. So who are the corporates? We have discussed about the private limited company, public limited company, the LLPs. They are the corporate. So as per the statute under which they are incorporated, it is mandatory for them to prepare the balance sheet on annual basis. For listed companies, like the companies who are listed on the stock exchange, like whose publicly listed company, they have to do it on a quarterly basis. But for the private limited companies and the other public limited companies which are not listed, it is a annual task that you have to prepare the financials. What is a cash flow statement? Cash flow statement is a statement that shows the movement of cash, like where you have to take the cash. Not exactly literally the cash, but the finances basically either in the form of bank account or a cash account. So you have to see the movement of the cash, like you have received the cash from here and you have paid here. So what is a movement of cash? You have received this against from your debtors. You have paid this much amount to your creditors, this much amount to your salaries, this against the loan, or whatever movement is happening, you will able to see it from the cash flow statement. Cash flow statement is mandatory only in case of corporates. private limited companies, and even not in case of LLP. So LLP are not supposed to prepare the cash flow statement. So companies are supposed to prepare the cash flow statement. Other than companies, everybody is supposed to prepare every entity is supposed to prepare the balance sheet and the profit and loss account. And in case of individual, like the proprietorship firms or me being an individual, if I'm doing business and there is no audit, like income tax department, if do not obligate us to conduct the audit, like the turnover is less than the certain limit, like 2 crores or 1 crores or 10 crores, whatever the case may be. If there is no audit, then I'm not supposed or mandatory required to prepare the balance sheet and the profit and loss account. But if I want to do it voluntarily, I can do it. And for certain other purposes, like whenever I'm taking a loan or have to submit my documents to the bank, I have to prepare these kind of like balance sheet and the profit and loss account. But if I do not need it, then I can skip it. But for audit purposes, there need to have a profit and loss account and the balance sheet. And for the companies and the corporate, these having a balance sheet and the profit and loss account is a mandatory task. So what we have to do with this, whenever we are preparing our financial statements, we will show everything on actual basis. We do not we do all the calculations up to a certain timeline. Like if we are preparing the balance sheet and the financials for financial year 23-24, then we have to conclude all our transaction till 31st March and prepare a balance sheet and show what is our total profit and pay taxes on it, what is the total turnover. We have to see and reconcile it with the GST, and we have to see what are total expenses, and we have to check if all the TDS is deducted on all our expenditure, and on the basis of that we'll see the profit and loss account. Then whatever the total profit, the net item, like net profit left, we have to see either we have paid appropriate advance tax on that profit, and if not, then we have to pay the self-assessment tax. Whatever amount of tax which is paid after 31st March, for let's say if we are paying any tax for 23-24, after 31st March will be self-assessment tax, and if it is paid before 31st March, that is within the same year, that will be advance tax. So this is a way we reconcile the profit and loss account. Then we have the balance sheet. Whatever fixed assets we have to charge the depreciation, like we'll claim the depreciation as an expense on all the fixed assets. And there are different kind of elements for the preparing the balance sheet, fixed assets, current assets, and I think that become too detailed for you to understand. But yeah, there are different type of elements in the profit in the balance sheet, like fixed assets, current assets, liabilities. Maybe have loans and liabilities, and we have capital element, and then we have current liabilities. So this is a kind of balance sheet format. And for the entities, like the corporate entities, there is a set format which is given under the Companies Act, that every entity have to follow that particular format for preparing the profit and loss account and preparing the balance sheet. And if you are non-corporate entities like proprietorship firm or a partnership firm, then there is a standard issued by Institute of Chartered Accountant for giving you the format for preparing the balance sheet and the profit and loss account. There is no format for the cash flow statement, but whosoever is conducting the audit will prepare a cash flow statement. And yes, once the financial statements are ready, then you have to submit the financial statement while conducting the audit to the auditor. And once they'll submit the audit report, that becomes the complete set of financial statements for any business entity or a non-corporate entity. So I think regarding the financial statement, this is a brief idea. If you have any specific query and you want to understand more deep into the financial statement, then I think we can have a detailed 1.5 hour session where I can explain each and every element of this financial statements. So I think from my side, this is all for today's session. If you still have any query, we can discuss.
So we'll just wait for some queries if somebody has.
Yeah, please.
2-3 minutes.
Yeah,
Hi, ma'am. I have a question. Am I audible?
yeah, you are audible.
Yeah, ma'am, I'm into garment exports and I have a PAN. It's a proprietorship firm, but I don't have a TAN. I do give away salary to my 2, 3 people and a CA who generate invoice with GST. Is it mandatory for me to have a TAN?
So for a proprietorship firm, TAN deducting the TDS become mandatory once the audit is applicable. Like if audit is applicable in certain year, let's say in 23-24, you come under the obligation of conducting the tax audit. Then from next year onwards, you have to obtain the tax and start deducting the TDS. But if till now you do not have a audit obligation, then you are exempted from deducting the TDS liability.
I am not under that.
Then you are not supposed to deduct the TDS. You can do it voluntarily, but this is not an obligation.
Oh, thank you so much, ma'am.
So,
And I do have a question regarding ROSCTL. Can I have that query?
yeah, please tell me.
On shipping bills, there are, apart from drawback, there are provisions for ROSTL and RODTEP. How do I how do I claim on those part? I'm into exports only, not into imports.
Okay, you are doing the export, and on the shipping bill, there is an element apart from duty drawback. That is a benefit that you're talking about. You are
Exactly.
already claiming duty drawback.
Yeah, I'm receiving drawback directly on my current account, but I am not getting any rebates or not getting any claim back on ROSTL and RODTEP. How do I claim those?
So that is an automatic process that you will receive, because in case of export of goods, everything is linked with IC and the customs, and whatever benefit you are drawing, it will be automatically received in your bank account. If you are not getting anything, then we have to discuss specifically. And to get into detail, I have to have certain documents from your side to see and give you a appropriate reply. So we can take it offline
Because
anytime.
I checked with my tax consultant, she informed me that we can only claim if in case we are importing certain goods. Against that, we can claim ROSTL.
I
Is that
have to no, it's not that true, because I have to see, because in the cases of export, whatever benefit we have, we'll directly receive in our bank accounts.
all right? All right. Okay.
Yeah, yeah.
Okay.
So if you want to discuss in detail, you can we can have this conversation offline, and I can see your documents and let you know exactly what is the scenario.
Yeah, please, ma'am. Can I have your, how do I contact your email or number?
Yeah, so I think Lopa, can I share my number over the chat box, or you will share with all the participants?
You could share it on the chat box, so it's readily available for all.
Okay.
Thank you so much, ma'am.
Welcome. I have just shared my number over the chat.
Divya ma'am, just one more query. And due to
Yeah.
network issues, I missed that advanced tax wala that thing. So what is that, and that is applicable for me as well?
Yeah, so basically, advanced tax is if you have any tax liability on quarterly basis, you have to assess, and if the liability is there, then you have to pay that income tax on advanced tax base on an advanced basis. So for proprietors, it is three installments date. One is 15 September, another one is 15 December, and another one is 15 March. So you have to ascertain your tax liability. If there is any tax liability, you can pay it in between. If there is no tax liability, you can skip the dates and move.
Okay. Thank you so much. Thank you.
So do we have any more questions, please?
If anybody have any other question later on the stage, you can just WhatsApp me because sometimes some question got stuck after some time. Yeah.
So, with your due permission, I would like to say on behalf of FIWE that would like to thank Divya. Has been an excellent knowledge dissemination webinar, And we really look forward to more such insights from you. And it's not, I would not say that it is a financial literacy webinar where I said that in literacy it is only to when you learn how to sign. I think you went pretty much deep and gave us a lot of insights into direct tax, indirect tax, the financial statements, and how mandatory GST registration and all those 7, 8 elements that you went through. It was really enriching, and I'm sure each of our lady entrepreneurs or budding entrepreneurs would have really, taken a lot of insights, wonderful insights, and the way you explained also has really been wonderful and enriching to all of us. And on behalf of all the participants and especially, we would like to thank you for your time, knowledge sharing, and everything else. And to all the participants, I would also like to tell you that as the second part of the financial literacy webinar, on 15th of June, there is another part of the webinar that is going to be conducted, which is going to be on mutual funds and various other investment instruments. That's also very interesting, and I think we all are pretty much not there still, and we all need to be updated on the investment aspects of it. So 15 June is something I think we should all register for, and looking forward to meeting all of you there. And Deva ma'am, we look forward to having more of you soon. And
Yeah, definitely.
yeah.
I would love to conduct other sessions as well to share my knowledge with all the entrepreneurs and specifically the women.
So yeah, thank you so much. Ria, can we conclude the session now, or is there anything that you would like to?
No, we can conclude it. And I thank you all. And if anything you want to discuss still, I am open for the conversation.
Neva ma'am, I have one more query if you can answer, please.
Yeah.
I just
please.
wanted to know because I just started and I'm just 1 year old. And sometimes, I come across the shortage of finance and all. So is there anything loan options available for us, specifically for women entrepreneurs for less rate of interest?
So basically, there are different kind of grants or loans at a lower rate are available, but you have to see because there is no specifically for the preschools, but I have to actually check what I can basically tell you because this is very specific question. So what I'll do is I'll check and you just send me a WhatsApp because once you send me, I'll reply it over to you because as of now, I'm not able to see what are the basically benefits specifically for this kind of business.
Fine. Thank you.
Welcome. So I think we can conclude the session, Lopa.
Yes, we can, and we surely will see more of you soon. Thank you. Thank you for everything.
Yeah. Thank you, all of you, and thank you for giving me the opportunity.
Pleasure is all ours. Take care. Bye-bye.
Bye-bye.